Hey everybody, it is Mark Coe for the 15th of June. Wanted to take a look at a couple markets here post FOMC yesterday and just see what we got going on. Euro dollar trades weaker. So basically what you're seeing on the 15th of June, you're seeing a stronger dollar. And let's reference this in terms of what's gone on because we've been in some really tight ranges in terms of currencies. And let me tell you kind of my thoughts here. Euro dollar is still within this recent trading range, and I'm really marking that closer to 1075 on the bottom. So although it was a short-term break to the downside, we actually haven't seen much of a breakout in euro. I think what you're able to see is some selling value up top near 113, and this is not strange considering the idea of what is happening up at 113, something I've pointed out for a long time in the analysis. This breakdown level from the fall of 2016, which is what we're seeing now, right? So it's some consolidation up there, and then ultimately your break lower in 2016. That's what euro's trading back into, right? So in this strong euro move, that's what euro's trading back into. And we've been pointing that out since the middle of May. Right? You're now talking the middle of June, so it's been a month. That's the level you're trading back into, but not clear move away from it just yet, just into it. So keep an eye on what's going on there. Dollar yen, another currency that has spent some time in kind of wider ranges, but of late we've seen a little bit of downside followed by a little bit of reversal. So dollar yen has given us some opportunity to stay within a range, but still given fairly decent little movement if you can capture the extremes of those ranges. So now let's think about what dollar yen's showing us. So dollar yen has topped out. I should get on dollar yen if I'm going to talk about it. Dollar yen has topped out in this 114 area of late, and now we're seeing the bottom side of that range. So 114 is what capped it in May, and you can see that represented here. And then your 109s have capped it on the downside. So you have not seen a daily close through 109. So think about what's getting represented here. The idea of value on the bottom side for dollar longs, right? Trading this wide range. So think about in March when you have FOMC raise rates, right? In March when the FOMC raised rates, where was dollar yen? Where was dollar yen when the FOMC raised in March? It was much higher. If my screens would light up, I could show that to you. But it was a much higher dollar. So not nearly the same type of value represented when they. There we are. Wow, that took a long time to populate. But this is where the dollar was trading 115 when they hike, right? So the story back in the March hike was not nearly as hawkish a Fed. Okay. So now dollar yen trades 6 big figures lower coming into yesterday's hike. So see the difference? This green line represents where they hiked in March, where the dollar's trading. This red line represents where they hiked yesterday in June. So all you've had is 2 rate hikes since then. 2 rate hikes. Dollar is 6 big figures difference. And the difference is it's trading on the high end on the March hike and it's trading on the low end in the June hike. So think about where you sit. If dollar is able to withstand these lows, this could be a nice several hundred point rise in dollar yen over coming days and weeks if it's able to sustain this. So now you have a very tradable area down here around 109 to trade off of. A very tradable area. So keep that in mind as you go forward these next several days and weeks to what the dollar reaction is, right? What the dollar reaction is in terms of currencies. Euro, although it's come off, has not had the same type of move as dollar yen. So euro has come off, so you're seeing some dollar strength, but not to the same level. It's just that there's been real value for euro sellers because now you're back up into that fall 2016 breakdown, right? That's what you're looking at. So for the 15th of June, just wanted to run through the other market that on this day in June, the middle of June, that's of some interest, because it's starting to get a little more interesting up here, is the E-minis. And the E-minis have had several false starts to the downside that have just been stopped. At the end of the day, don't overthink it. Understand what the E-minis are doing. Understand what they're doing. They're sitting range bound here. They're sitting range bound. You don't have to overthink it. Top edge, bottom edge. Right? Top edge, bottom edge. That bottom edge has been in place for several days. And if you want to look at it from the standpoint of the break higher, you could draw it a little closer to these levels, and then that would contain the last Friday sell-off. But I like to look at where the markets really close, and so you got to close in here on the 12th, and that's why I'm referencing. That's why I tighten it. So I don't draw a horizontal line. I draw a zone, but just for purposes of these illustrations, it's pretty easy to diagnose the area. But understand, buyers have been in control of S&P. Buyers have not lost control. Every time you start freaking out and thinking, oh, is this thing going to collapse? Understand what it's holding. It's holding bottom edges, right? That's the benefit of the doubt right there. The buy side has it. So keep that in mind. Crude oil, the sellers have it. It's a different market. Crude oil, the sellers have it. S&P, the buyers have it right now. And keep that in mind until they lose it, right? That's what it is. All right, guys and gals, so for the 15th of June, I wish you all good trades in the market, and talk to you soon. Cheers.